This is Group 6 presenting on Bank of America, and we start with Gretchen Martinez and Eduardo Bermudez on a brief financial analysis. Bank of America is one of the largest banks engaged in providing a full range of banking, investing, asset management, and other financial and risk management products and services. It is a publicly traded company headquartered in Charlotte, North Carolina, and operated throughout the United States and in more than 30 foreign countries. As for many in the financial sector, 2008 was an extraordinarily difficult year for Bank of America, taking steps such as cutting dividends, which had increased every year since 1977, and not having any member from the executive management team receive a bonus or incentive compensation for 2008, still resulted in a drop in profitability and their first quarterly loss since 1991. To top it off, it negotiated with the U.S. government to invest another $20 billion in the form of preferred stock in order to close the acquisition of Merrill Lynch. Yet with all the bad news and economic challenges, they managed to earn $4.01 billion in 2008, although this was a big drop from their $14.98 billion in 2007. Earnings available to common shareholders were $2.56 billion, which was down from $14.80 billion in 2007. ROE also fell from 11.08% to 1.8%, and expenses rose from $18.44 billion to $26.83 billion. All in all, 2008 was not all bad for Bank of America. The bulk of their losses were the result of the severe market and economic impact. They still had a rise in revenue of 8% and hold $883 billion in deposits, giving them a 9.7% increase from 2007. They continue to be well capitalized and extremely liquid, which is not something many others can say in the financial services sector. The bank's wide array of offerings also means it's facing stiff challenges on several fronts. Most recently, the bank needs to raise $36.6 billion in equity to bring capital ratios in line with its peers. We believe there are certain key ratios that Bank of America should take in consideration to either maintain their financial position as well as to improve their situation. Gretchen will present some of these for us now.
First of all, let's talk about capital ratios. Most importantly, Tier 1 capital ratio. This is a core measure of a bank's financial strength from a regulator's point of view. The total Tier 1 capital ratio for Bank of America was 10.09, making the bank well capitalized on the regulatory formula. It is important to point out that keeping the bank with the total Tier 1 over the federal requirements allows the bank to stay away from debt rating downgrades, negative press, and regulatory scrutiny. Another important ratio is revenues per employee. Ideally, a company wants the highest revenue per employee possible, and it denotes higher productivity. As of today, Bank of America has revenue per employee of $323,000, while the average of the industry is $281,000. Such a big difference denotes the high productivity of Bank of America. At this point, we would like to encourage the Bank of America to continue with this practice. We can also mention the leverage ratio. This ratio measures the extent to which capital has been invested in PP&E or fixed assets. Currently, Bank of America has one of the lower leverage ratio in the industry. As of May 2009, Bank of America has 9.71% with respect to the industry, which is 15.23%. Using these figures, we can arrive to the conclusion that there is a proportional small investment in fixed assets in relation to the net worth. We definitely encourage Bank of America to continue with these practices, which will allow them to have a better cushion for creditors in case of liquidation. Another significant financial ratio we analyzed was ROE, or return on equity. This measures the rate of return on the stockholder in the corporation, which includes their paid-in capital as well as retained earnings. It is important to point out that it measures the company's profitability as well as the firm's efficiency at generating profits from every dollar of shareholders' equity. In the case of Bank of America, it's important. Its current REO ratio is 2.9 with respect to the 5.7 rate of the industry. Therefore, we can conclude that the 9.28% decrease they suffered in 2008 has severely impacted their growing potential, and it's something to work on. If they can manage to get back to 5.57 ROE which will place them at a 5% increase from 2007. It can have a great boost of confidence for everyone. This is a brief financial analysis of Bank of America, and next we have Alex and Leo with SWOT Analysis.
Thank you, Gretchen and Eduardo. My name is Alex Fonseca. Along with my partner Leonardo, we'll be discussing Bank of America's strengths, opportunities, weaknesses, and threats in the banking industry. First, I would like to go over some strengths and opportunities that Bank of America has in the banking industry. Their strengths include a huge customer base, diversified range of banking and non-banking financial services and products, innovations in products and services that give it a major strength in attracting customers, their convenience, and brand recognition. Opportunities include expansion in international markets, further consolidation into the banking industry, the Merrill Lynch acquisition, and their countrywide acquisition. There's a couple of these points that I would like to expand on. Number one, their diversified range of banking and non-banking financial services and products. They have a huge product line tailored to students, military banking, and small business owners. A lot of products that separate them from the competition, creating a huge customer base. Their convenience includes online banking, mobile banking, and a large retail branch availability. You never have to set foot in a branch with an ATM card and direct deposits. You never have to use checks with online bill pay. In their opportunities, I would like to expand in the expansion in international markets. Bank of America has partner banks overseas, but not its own branches. Expanding into the international market will open up new doors for them. The Merrill Lynch and countrywide acquisitions. Although both acquisitions got bad reviews from the financial industry, capitalizing on the market share provided by these two companies will absolutely strengthen Bank of America's leverage as a total solution bank.